2019. I hope that answers the question. Next one.
Saqib Latif, one of the most important definitions amended was that of industrial undertaking. Can you elaborate on this?
Indeed, Saqib, and that's a fantastic question. That's what we are about to cover in the next section. I think that we should now go back to our session because the question might start relating to the slides that we are to cover. So let's go back to our presentation and we'll come back for the next Q&A in a bit. So let's continue with the definitions we were covering. So low-cost housing would mean a housing scheme that would be developed or approved by NAFTA, which means the Naya Pakistan Housing and Development Authority, or under the SARS program. NESPAC would refer to National Engineering Services Pakistan. NESPAC is being referred in terms of certifications and approvals. Residential building would mean a building which is not a commercial building but does not include building used for industrial purposes either. Saleable area in case of buildings would mean saleable area as determined by the approving authority or map approving authority or the NESPAC under the relevant laws. Unit means a self-contained or independent building or a part thereof, including houses, apartments, shops, offices, flats, etc. And we have covered all the basic definitions and we are ready for the main core incentives and their conditions. Are you ready, guys? Yes, you are. So let's continue. The first major incentive is that the definition of the industrial undertaking has been amended by introducing subclause AA under clause 29C in section 2 of the income tax ordinance. What does it say? Let's quickly read and then I'll explain it to you. This new subclause that has been inserted reads as, from the first day of May 2020, next month, a person directly involved in the construction of buildings, roads, bridges, and other such structures, or the development of land. So both builders and developers are covered within the definition. To the extent and for the purpose of import of plant and machinery to be utilized in such activity, subject to such conditions as may be notified by the board. So what happens here is that the definition of industrial undertaking is being amended to include the construction of building, road, bridges, and other such structures or the development of the land. And it will basically facilitate the import of plant and machinery to be utilized in all such activities, subject to any condition that the board may notify to keep some controls and checks. So basically, the biggest incentive for industrial undertakings is when they import different plant and machinery, they get serious tax breaks and rebates and tax credits, etc. So now that same treatment would be extended to the construction industry as well by view of this change. And hence, it is a big incentive for the construction industry. One of the prime issue with the construction industry, as the people involved would know, that many of our plant and machinery is old. So just like one of our member was sharing, they are planning to indulge in the 3D setup. So any plant and machinery that they'll now be importing for that 3D setup, by virtue of this definition, would fall in the construction industry, being an industrial undertaking, and entail the serious tax incentives that are available to other industrial undertaking. So this is a big incentive for the construction industry. Then fixed rates of income tax have been introduced as a final discharge of the tax liability. And you have the table in front of you. This is exactly as the table in the ordinance, but MLCC has prepared in Excel, so it becomes more visible and easier to use for you. You have this presentation, so do use it, but be courteous enough to refer to MLCC as well. Anyway, you have 4 columns. The first column refers to the area, The next two column refers to the major cities in Pakistan. So column 2 is Karachi, Lahore, and Islamabad, and column 3 is Hyderabad, Sakkar, Multan, Faisalabad, Rawalpindi, Gujranwala, Sahiwal, Peshawar, Mardan, Abbottabad, and Quetta. And the column 4 is urban areas not specified in column 2 and 3. So the tax rates in respect of these areas have been divided into 4 segments. The first segment is the tax on builders for commercial buildings, and the project for tax on builders for commercial buildings is irrespective of the size. It can be any size. There would be a fixed tax in Karachi, Lahore, Islamabad for commercial buildings, and in terms of any builders undertaking commercial projects, it would be 250 rupees per square foot. In the cities falling under column 3, it would be lesser, rupees 230 per square foot. And in any other urban areas other than column 2 and 3, it would be just to rupees 210 per square foot. Whereas the tax for builders for any residential building that they build up to 3,000 square feet in Lahore, Karachi, Islamabad, it would be only rupees 80 per square foot. And for 3,000 square feet and above, it would be rupees 125 per square foot. Whereas for the cities in the column 3, up to 3,000 feet uh, size of residential building, it would be only 65 rupees per square foot. Whereas for 3,000 feet and above, that would be about 110 rupees per square feet. And for any urban areas other than column 2 and 3, for residential building projects, it would be just rupees 50 per square feet up to 3,000 square feet, and rupees 100 per square foot above that limit. Now let's talk about the developers. For the entire project of a developer that happens in Karachi, Lahore, or Islamabad, without any restriction of the size, the fixed rate of income tax would be 150 per square feet. A square yard, sorry. So now we are talking about square yard instead of square feet. For the cities appearing, the urban centers appearing in column 3, the tax on developers for entire project in these urban centers would only be 130 per square yard. And as mentioned in column 4, for any other urban areas, the tax for developers would only be 100 rupees per square yard. For development of an industrial area, so now that's being separated for the developers. For development of an industrial area of any size in Lahore, Karachi, Islamabad, the fixed rate of income tax would be only rupees 20 per square yard. And it would be the same for the urban centers appearing in column 3. And it would be even half at just rupees 10 per square yard for any urban center other than in column 2 and 3. However, a few finer points to note. In case of mixed use buildings having both commercial and industrial area, respective rates mentioned above shall apply to the respective development, to the respective building of the commercial use and the industrial use. In case of development of plots and constructing building on the same plots as a single one project, both rates shall apply. Provided that in the case of low-cost housing and all projects developed by NAFTA, the higher of the rates shall apply. So I hope this is a major incentive and is taken in that positive spirit. And it was actually a big demand of Abad and many other builders and developers, many big names, that a fixed tax liability be fixed so that they can be saved from audit, the amnesty be declared. So many of their demands have been met. So hopefully we'll be seeing a lot of construction activity in the days to come, as well as the development activity. Next major relief after the fixed rates incentive and declaration of construction sector as an industrial undertaking, particularly in lieu of the import of the plant and machinery required for the works thereof, for the construction works, be it building or development. Another major incentive is the exemption from CVT by way of a change in the Finance Act 1989, as well as the exemption from turnover tax under section 11311C. So it basically falls very beautifully with the introduction of fixed tax rates, that now these fixed tax rates have been introduced and they have done away with the turnover tax under section 113(113)(c). So first of all, CVT changes have been made in the Finance Act 1989, and CVT has been exempted. But we do know that the provinces now have the power, especially post 18 amendments, autonomous rights. The provinces now have the power and are expected to legislate for the same in the provinces. But by making a change in the Finance Act 1989, the CVT is being exempted for all kind of property transactions within the territorial jurisdiction of the Islamabad Capital Territory. Section 113 and 113C of Income Tax Ordinance 2001 shall not apply on the turnover, income, profits, and gains of a builder or developer from a project. And obviously, when we are talking about builders and developers, we are talking about the builders and developers who register themselves with the FBR. Otherwise, they would not fall within the definition of the builder and developer. It's very important to not lose sight of this, that we are talking about these terms, builders and developers, in the context of this ordinance. So those requirements need to be met. Anyway, exemption from capital gain tax. A lot of discussion has been about this, that oh, capital gain tax has been exempted, it's, or whether it's been abolished. So what exactly is happening? Let's see. So there will be exemption from capital gain tax in case of the sale of a constructed residential property, provided three conditions are met. Number one, that at the time of sale, the residential property was being used for the purpose of personal accommodation by the resident individual, his spouse, or dependents, and for which, this is important, any of the utility bill, any, is issued in the name of such individual. So it can be an electricity bill, it can be the sui gas bill. So any utility bill should be in their name, and the property should have been used for the personal accommodation. The land area of the property should not exceed 500 square yard in case of a house. So that's roughly, I think, about 16 and a half marlas. If I talk in the typical language that we measure many construction projects, but people are well versed with the square yard and square feet too. Or 4,000 square feet, that's I think 16 and just about under 16 and a half marlas, or close to 16 marlas, somewhere in between. That's the quick calculation on top of my head. Anyway, the land area of the property should not exceed 500 square yard in case of a house, and 4,000 square feet in case of a flat. And exemption under this clause has not previously been availed by the individual, his spouse, or dependent. So if these three conditions are met and you are selling a constructed residential property, then congratulations, you will be exempted from the capital gain tax. Another major incentive. There are some other miscellaneous incentives that the builders and developers will be able to enjoy. So firstly, there would be no withholding tax on the services such as plumbing, electrification, shuttering, and other similar services other than those provided by the companies. So the builders and developers would not need to make the deductions under section 153. So similarly, there would be no withholding taxes on the purchase of material except for cement and steel. So changes have been made in sections 150 and section 153 of the Income Tax Ordinance 2001 to this effect by way of the Tax Laws Amendment Ordinance 2001. Tax-free dividends paid by such companies. Which companies? The single object companies that would be registered with FPR, and these companies would be builders or developers opting for taxation under this scheme, and these dividends would be paid without withholding tax deductions on such dividend payment. So again, it would be a big incentive to the shareholders, the investors of such companies. They'll be getting their dividends from the company tax free. And the businesses, the builders and developers that will now be involved in the construction, register their project with the FPR properly through IRIS, would be able to take credit or white the income up to 10 times the amount they'll pay as tax. So if a builder and developer end up paying 10 crore as tax, they'll be able to whiten 100 crore of their money as white income. The implication in terms of tax planning, in terms of future, in terms of section 111 are amazing. Reduced rate of advance tax on auction of immovable property will be enjoyed by the builder and developer of just 5%. Previously, the rate of advance tax on auction of immovable property was 10%. And the tax on projects registered under the low cost housing scheme, be it by Naya Pakistan housing scheme or other as approved, would be further reduced by 90%. So if the tax liability was to be, let's say, 1 crore of a big project, and that project is actually a low cost housing project, so that would be reduced by 90%. So 1 crore would become 10 lakh only. Can you see all the benefits? In addition to other benefits, the tax liability would be further reduced by 90%. So I say these are some pretty amazing benefits. Now, the next one of the major one, and perhaps the one that is going to be impacting the property prices the most, is the amnesty. It's not referred to as amnesty, but it's what the tax professionals, the property, the construction industry, and the ordinary masses are calling it. So we have included the word amnesty. Formally, it's being referred to as exemption from Section 111 of Income Tax Ordinance 2001, which deal with the unexplained income or assets. Before we talk about this amnesty, I think now would be a quick time to take some questions. What do you think, Nizam? Ready for that?
Sure, sir.
Let's do it then. Let's continue from where we left.
Okay. So, question from Munib Afan. How would the purpose accelerate the Pakistan's economy? Understanding that the purpose of recruiting the daily wages linked to the construction, would that really be achieved assuming gatherings are risky?
Okay, that's a very interesting question. Okay, Munib, you have basically asked two things. One is the economic consideration and the other is the health consideration. So you have asked how the proposed benefits would accelerate Pakistan's economy. I believe I've discussed them in sufficient detail. The aim is to get builders and developers and buyers, all of them motivated to start working, investing in the construction industry, for builders and developers to start doing the construction work, the development and building work, and thereby provide jobs to daily wages as well as to ancillary industries. How would that impact in terms of gatherings? The government, the local administrations, the provincial governments are releasing SOPs, standard operating processes, how the work would be done, how many people can be in an environment, how much distance would be kept between them, whether they would need to be wearing the mask, this hand sanitization that would need to be there. For some bigger projects, the walk-in gates, the walk-through sanitization things that are now the new in-demand thing for many businesses would need to be introduced. Regular temperature would need to be taken. So those SOPs would need to be implemented. One thing that would need to be taken care of, and we do hope that it would be the actual implementation of SOPs. So the administration would need to be really careful and ensure that these SOPs are implemented. And we believe, especially the builders and developers who would be undertaking these big projects, would not shy away from some minor expense for the sake of the continuity of their own business, as well as for the health of the masses. And hopefully, if the activity does start taking place to the extent envisioned, it would resuscitate the economy. More than 50 to 70 industries, as per various studies, are set to be linked with the construction industry. So if the construction industry start working, all of those industries would start working, the daily wages would start getting employment, etc. So the economic wheel would start going forward, and thereby the ancillary banking and finance industry would also start getting businesses. And these are some of the prime industries that drive the engine of Pakistan's economic growth. The agricultural industry has already been given various exemption and has started the work. So all these action taken together, I think the government is trying to do whatever is possible within the context to revive the economy. It can be argued that certain other industries could have also been given similar incentives, but the sky's the limit in terms of the wishes and the dreams. And certainly those arguments would have their own merits. But let's say something is better than nothing, and the ordinance is very well received, let me tell you, from the construction industry. There are a few clarifications that are still being sought, and they are being awaited to be issued. But overall, the sentiment and reception has been very, very positive, and many builders and developers are really looking forward to go into action now. Let's hope this translates into action too. I hope that answers the question. Next one.